Now we welcome Kevin Bott, head trader at Luminary Trading. He left the corporate world to trade full-time and hasn't looked back. His topic today is creating order out of chaos using structure in NLP. You'll learn how market structure gives you a directional edge, how to crush self-imposed limitations using NLP, and how to engage price action and delivery with purpose. Kevin, show us how it's done. I think Kevin's on mute.
There we go.
There you go.
You guys see my screen? We good?
Well, yeah, we could see your screen.
Awesome. I want to thank the Traders Corner for having me this morning and for all you guys listening. In the interest of serving you best, I'll try and keep my bio a little bit short. The challenge that I have is I usually speak on these ideas for about an hour, hour and a half each, and I've got about 45 minutes to go over 3 of them, so I'll keep it short. I wanted to start today by a little bit of a story, which kind of highlights a lot of what I want to talk about. And it was about this little girl in class who never really paid attention. And during one class, there was an art project, and the teacher took notice that this girl was actually paying attention. And she went over to her and asked, "What are you drawing?" And the little girl said, "I'm drawing a picture of God." And the teacher was a little bit puzzled, and she said, "Well, nobody really knows what God looks like." And the little girl said, "Well, they will in a minute." Right? And I think that highlights a lot because as children in our youth, we're not afraid to be wrong. They'll take a chance. And if something doesn't work, they use that as feedback and they improve. And yet throughout our youth and our adulthood, we tend to educate ourselves out of that. We're afraid of taking risks. We're afraid of being wrong. And when we bring that story into the market as traders, we tend to seek perfection because we don't like being wrong. We attribute that story, that representation to losing money. And that actually is one of our biggest impairments in becoming professional traders. So one of the questions actually that I pose to you guys is, what if it's not our strategy? What if it's our internal story that impacts our ability to follow that strategy? What if we have to actually reinvent what we consider ourselves to be in order to really be successful in the market? So again, in the interest of keeping my bio short, I believe in proof or promise. And why you guys should listen to me in the first place, I want to go over that really, really quick. So I've been trading for about 9 years, I believe. I've been consistently profitable trading NASDAQ since 2023. And I've earned multiple live accounts at some of the top futures prop firms as a result of that consistency. So not just funded accounts, not just passing evaluations, getting payouts and the like, but actually earn consistency to the point where they've offered me live accounts to trade with them. So I've taught dozens of people how to become consistent at trading price action itself. And more importantly, I'm an expert in failure. I've actually found many ways of trading the market that doesn't work at all. I ran up $25,000 my first month trading futures, thought I knew what I was doing, and my internal story caused me to blow it all very, very shortly after. So I've found many ways that the market does not trade consistently. I have a foundational knowledge and extensive experience applying these NLP concepts, some of which we're going to go over today inside of this presentation, that work very, very well for others. My lovely wife is an NLP master practitioner, so I have access to her wealth of knowledge as well. And we try and help others holistically both change their internal story and become the trader that they know they can be. And I'm the founder and the owner of the Bullpen mentorship, which is essentially my elite mentorship, where we teach these concepts and NLP concepts on a daily basis and go over how the market actually works. So our mission essentially is to empower and arm traders to make better decisions. So if we define what life is, essentially, at its very basic level, it's the ability to make a decision. Rocks don't make decisions, they're not alive. Even trees make decisions to reach up and grow towards the sun to get more sunlight, right? And better decision making leads to better habits. And if we do those enough, it becomes what we consider personality traits. And ideally, if we do the right habits over time, we make more money. That's the end goal, but we focus on the process. And each individual that comes both through the doors or whoever starts trading, they all have different stories. They all have different internal representations. And our goal is to approach trading from the perspective of each individual. Some will be very, very good at being very aggressive and scalping. Others would prefer swing trading and holding on for a little bit more risk. People like trading a little bit faster, a little bit slower. So it doesn't really make sense to have one blanket strategy that covers everybody, because it's essentially a square peg in a round hole. And our goal isn't to make money for 1 week. It's to be consistent over time, to change our life. So we like to bring different people to different trading desks and then amplify the success that way. And this is kind of highlighted by trading being very, very simple, but not easy to be consistent of. So essentially what we need, and we're going to go over a little bit of strategy first before we get into the Mind Ninja stuff. When we sit down at the trading desk, assuming we don't want to just YOLO an account and charge in full porting trying to make money, we need to know and answer a few different things, which leads us into the first topic of market structure itself. And I believe that everybody that's trading needs to know some form of structure. Every trading decision needs to know if we're trending or if we're ranging. And we have to then structurally define what that looks like. Are we going up or are we going down? Right? Very, very basic. But if we're able to do that very, very quickly, then we can focus on other things. But more importantly, this answers the question, what is the market doing? That's what market structure does. And if we're in a bullish trend, then ideally we expect new highs to form. If we're in a bearish trend, we expect new lows to form. So if we're going long in a bearish trend, we're probably going to have trouble. Or if we are going long in a bearish trend, it's of a retracement nature. We're not looking to shoot for the moon. And if we're in a bullish trend and we're shorting, well, ideally we're not trying to trade this thing back down to zero, especially in the case of the NASDAQ. You're going to have a lot of trouble, right? Now, we use candlesticks and validations of price movements. There's very little to no indicators on our chart. We believe price is the primary indicator that everybody should follow. And we're essentially trying to determine whether structure is weak or strong. If we're pulling back, then we essentially want to be buying from areas where price has made major decisions in the market. We expect that to continue, and we consider it lower probability if we're trading from an area that just put in a huge move and it blasts through it. Well, now we've got more information in the market, but we consider that a low probability event. So we want to be risking off of strong structure, and we want to avoid weak structure. And in trending environments, we expect pullbacks to make new highs and new lows. And then, as I said, we can risk off of what we consider these protected highs or protected lows once the market pulls back into what we consider the prior swing. And we expect that not to break before a new high or low has been achieved. So what does this look like? Pretty much everybody that's traded the market for a period of time understands or has heard, well, trending is just a matter of higher highs and higher lows. And yet that doesn't really answer the question, well, this is a higher high and a higher low, so why did that eventually get snapped here? So from a very basic perspective of market structure, we create an area of interest. It makes a new high. We trade back into the prior zone. You can see this by this hourly chart on the NQ. We trade back in, we leave. We leave, we consolidate here for a little while, eventually pulling back to where? This prior swing. And then we leave. We're creating what we consider to be protected lows. In other words, once price trades back into this area of interest, we can go long in theory pretty much anywhere inside of it, and we expect a new high to form before this low is taken. Very, very basic strategy, and yet profitable, right? So we leave this zone, guess what? We consolidate for a while, eventually trading back into the prior swing, and then we leave. We make a new high. We trade back into the prior zone, which is this, and then we leave, so on and so forth. And we consider this to be a bullish trend until one of these protected lows is snapped. Not this one, right? We're looking at the protected low because a new high has been formed. And this is how we use market structure, right? Bullish movement, we're looking for longs, or if we're looking for shorts, it's a retracement back into here. We're not looking to short this to then go to zero. We're also not longing this to here. That doesn't make sense either. right? Now, what ends up happening eventually, because all trends can't just go on forever, they have to stop at some point, we get what's called a break of structure. So if we look at this 5-minute chart, you see a few different things. The first one being, you've got this area of interest, we consider this a valid pullback. And what that means is that we've created a protected high in here, and we've now created strong structure, which is responsible for something happening. We made a new high. So we want to be risking off of this zone. It actually did something, right? This pulls back into this area of interest, we would expect a new high to form. And when it can't, we expect this low to go. So until this makes a new high, we consider this pullback to still be weak structure. It's once it makes a new high that we now look at this as a protected low and we can risk off of it. And as we see to the right of this chart, we finally get a break of structure and a new trend starts. So going long anywhere in here, you're going to have a huge issue, right? As we can see, but we have to quantify that on the chart so that we're able to make better trading decisions. And then over time, that makes a lot of money. So what we're trying to do essentially is we're trying to stack high probability ideas, right? Trading back into the prior zone, we want to be long. And then we shift down to lower time frames to then determine, okay, we're doing this, and then we expect higher prices. So we're stacking confluence on top of confluence on top of confluence. And usually what you find is that after a trend goes for a long period of time, you'll have a break of structure, and then a new trend is formed. And that gives equally high probability ideas on the other side of the movement, okay? Now, this leads into the sister, so to speak, of market structure, where we talk a little bit about objectives. And this leads into narrative. So if market structure answers the question, what is the market doing? Narrative then answers the question, why? And narrative is synonymous with market objectives. So if you're getting in the car, pretty sure you'd want to know whereabouts you're going. Otherwise, you're going to look very, very silly in that car, aren't you? Right? So if we're going up, we want to know why we're going up. And usually in trending environments, that's very, very easy to answer. If we pull back, we're now in an area of interest, and then we continue up. Well, the why is very simple. We want to take that high. Likewise with bearish movements, we pull back. Why are we going down? Well, it's to make a new low. Why? Because we're in a bearish trend. Very, very simple. But we believe that this is a huge learning curve as it leads to multi-time frame analysis. And in my opinion, the fractal nature of price is essentially how everything ties together. You've got a higher time frame bullish movement. Well, eventually you're going to get a lower time frame pullback, and that's where the opportunity lies. That's where the higher probability events go on, where you can essentially make a lot of money in the market, assuming you're trading with the trend. Okay. Now, as I said, in trending markets, objectives are simple. So looking at this 5-minute chart again, this bullish trend, very, very simple. Price trades back into here, we make a new high. Price trades lower. You'll notice this actually didn't trade far lower, but the objective is to make new highs until the trend snaps. And then the objective is to make new lows. And essentially, this is a higher time frame movement that's doing the exact same sort of thing on a 4-hour time frame or a daily time frame or whatever higher time frame you look at, right? So you get changes in order flow or breaks of structure on lower time frames. That functions as pullbacks into higher time frame areas of interest. And our trading models are essentially built around this. So very, very simple. You've got a higher time frame move, and we characterize a higher time frame move based on the attempts of reversing the trend there are. And you notice barely attempts to reverse this bullish trend, sideways, very, very strong move. But we look at this move here, and this is where we start to get really excited because we see multiple attempts of reversing this trend. This is institutions that are getting involved here long. And what's going on is they're scaling in however many contracts they can in there. And this is a bearish trend. This is a lower time frame pullback because of the amount of times that it's trying to reverse this trend. Not exactly violent. We expect another move like this. So what do? We wait. Now, I believe that pretty much all trading systems are looking for a way to get involved in here for this move. Whether you're trading based off of price action, whether you're trading based off of candlesticks, or you've got 20 indicators on your chart and you're looking for this, that, and the other. We're all trying to figure out when this move has gone from being bearish to being bullish. Buying here, you're probably gonna have a hard time, or you're gonna be sitting in this for a period of time, hoping that you're right before this low goes. Whether you have a high probability or not, I like being involved as the move is explosive. I don't like waiting for hours inside of my trades. I like knowing that I'm right. And usually if I'm right very, very quickly, as you can see by this bullish movement here. So then the question becomes, why here? Why did that move happen now? Essentially what happened is you have this lower time frame pullback. Price then breaks structure and flips. You can see this higher time frame candle here. As soon as we close above that, we determine price to have flipped. We were bearish, now we're bullish. We want to be longing in here. And surprisingly, if you look at this on a very lower time frame, you see the exact same sort of thing happening here on a higher time frame. And then even smaller, you see it happening in here. We close above this candle. So this closes above that on, say, a 15 or hourly time frame. This closes above that on a lower time frame. And it's in here that we like getting long. And that leads to an explosive movement. This is where our money is made. This is where our payouts come from, right? We're not holding this for hours. We're in and out generally in about 15 to 20 minutes. And we're going to go over a couple of different trades that we took last week just to kind of highlight this idea. And then we'll get into some fun stuff with some NLP. So we've answered what, we've answered why, and now the third question obviously is where. So if we're leaving New York City, it'd be pretty helpful to know what streets to take out of it, right? If you're taking a road south and you're trying to get to Seattle, you're probably gonna have a hard time getting there, right? You end up in Florida and you're wondering where the hell you are. Not a very good idea, right? We gotta know the areas of interest that give us these high probability areas, right? So what we personally use is we use 15-minute or 1 hour highs and lows. Usually we like to take these trades in the first 1.5 hours of the market. So quite often we're done before 11 a.m. Eastern. We've made our 1, 2, or however many thousands, whatever, and then we're done. And then, as I said before, we like to be in alignment with the current trend. We're looking for longs if we're delivering higher on a bullish time frame or bullish delivery. And we like to be taking shorts if we're delivering lower on a pullback. Usually the first 3 pullbacks, we expect new highs or new lows. And after that, trends essentially are getting a little bit exhausted and we're looking for high probability pullbacks to pull back into these prior areas that we saw earlier, right? So again, looking for order flow being bearish and flipping bullish, or looking for bullish order flow that then finally flips and tells us that it's ready to pull back. The key with this is that we're letting price tell us what it wants to do. We're not scaling in, hoping something's going to change. We're waiting for the chart to actually tell us that something's going to change. Now, if we look at this trade from last week, this kind of highlights a lot of it. And this was a beautiful trade that we took. And you'll notice the first thing that this is your lower time frame. This is your 15-minute chart. This trade went from about here to here, or that high rather. We actually didn't even ride this nearly as much as it could. And I'm fine with missing all of this because I want that high probability confluence that goes on. And there was actually multiple trades in this in reality. But the framework of it is one that I want to highlight because I feel that consistency comes from doing the exact same thing over and over, and that's your strategy. So in this, essentially we have a 15-minute low. We already looked at what makes this a valid area of interest, right? So we have a valid pullback. This area made a new high. We now want to be risking off of this, expecting that this low is going to hold. And we actually wicked down, which was a little violent at the beginning of the morning, but we still end up holding this zone. We didn't close underneath it. So what we're looking at, we got this 15-minute low, and we've got multiple attempts here of reversing the trend. So this therefore becomes a lower time frame pullback. And more importantly, we are bearish in order flow. We're making lower lows, and lower highs, right? From a very basic standpoint. So we're not getting involved in here or here, right? You could actually be short in this for this area of interest, but the higher probability trade is to wait for order flow to flip. We were bearish. We want to know when we flip bullish, because our 50 minutes pointing up, our higher time frames pointing up, we want to be long. And that's where the high probability is. We've got a high probability area of interest that we want to be risking off of. Now we've got a high probability idea for entry that we can also risk off of. So the fractal nature of price comes into play. And what ends up going on here is we get involved in here on failure, and then we run this high up, right? So the objective of this 15-minute time frame, trading back into the prior zone, should make a new high, and it did. Did it ever? I mean, this could have been held for quite a bit, but again, not really concerned about that. I'm looking at taking my money and then resetting and getting involved if there's another opportunity that comes in. Okay. Now, why 15-minute and 1 hour highs and lows? So I'm not sure if anybody here is familiar with candle range theory, but essentially what we're doing is, if we have a bullish 15-minute candle that we see, that candle has to form somehow. And how these bullish expansion candles are formed is they open, they trade lower, ideally taking some form of liquidity. That's an objective. And then it trades back through that open. And then it expands, eventually coming up here. And then right as the candle closes, ideally, it ends up pulling back slightly and closing here. So from a fractal nature of price, we want to be involved somewhere underneath this open or close to it. And that's why we use our lower time frame. So we want to determine, are we bullish or bearish? If we're bullish, we're expecting expansionary 15-minute candles on the bullish side. So we look at this open. We get an order flow change. In other words, our lower time frame is bearish. Then it flips bullish. Okay, happy days. And then it trades back ideally to equilibrium, which gives us our entry. And then we want to be part of this expansive, explosive movement up. So we want to be positioned underneath here with the idea of at least taking this high and then expanding to wherever our market structure idea is to the left. Now, the interesting thing about this way of thinking, of stacking high probability entries on top of high probability entries and essentially studying how the market moves itself, is that we can look at market structure, and you can probably study market structure and be fine with that, or have a working knowledge of that over a weekend. And you can develop different strategies, or somebody could give you a strategy, and the reality of it is that it's not even the strategy. We can say that it's profitable, we can be given ideas or hard knowledge that the strategy is profitable, and yet following it is something entirely different. And that leads into the concept and discussion on NLP that I want to get into. And NLP is essentially the study of why we do what we do. It's short for neuro-linguistic programming. And the presupposition with NLP is that we do everything, whether that's trading or in our relationships or work or our personal life or our thoughts, whatever, we do it for one of two reasons. We're either doing it for pleasure, we get something that we like out of it, or we're doing it to avoid pain. That's how addictions are formed. That's how good habits and bad habits are formed. It pretty much answers everything. And as humans, we have the fun ability of being able to endure short-term pain for long-term gain. But we also have the ability to do that in reverse. We do things that avoid pain in the near future, even though we know it'll be good for us long-term. We call that procrastination, right? So the idea is that because markets are fractal, and we know this, the fun thing is that life is fractal as well. How we do something is how we do everything. So if you're very, very meticulous and you're a perfectionist by nature at work, right, because your profession demands it, you know, you got to look over 101 different million spreadsheets and find exactly what the errors are in there. And again, going back to the initial story, we're afraid to be wrong, which means we usually look for perfection. And we bring that to trading. Well, now all of a sudden we got 20 indicators on our chart and we're seeking perfection. We're missing essentially how the market's moving because we're looking for a holy grail of sorts. And that generally does not work. It does not work, because the interesting thing about trading and why the majority of traders fail, in my opinion, is that we will get rewarded for doing bad decisions and we won't be rewarded for doing good ones. So what ends up happening is when we break our rules and make money, how often are we more inclined to breaking our rules in the future, right? And that's the danger. That's the real danger. Couple that with the majority of trading psychology that you read and see and hear, it's designed to make you feel good, but it doesn't actually have practical applicability to our problems. And that's kind of where the bullpen comes in. So we're, as it says, we're a perfect mirror of our beliefs and internal representations. And what that means is that, and anybody who's actually achieved a measure of success in trading will know this too. If you have a very negative relationship with money that it's hard to come by, that you have to work 10 to 12-hour days in order to make a lot of money because, well, that's what your parents did, or that's what you have to do, right? In your youth or otherwise. And then all of a sudden you're making your monthly salary in an hour and a half in the morning. How likely are we to that running havoc in our psychology, right? So the easiest way of looking at NLP and this sort of way of thinking is by imagining that we're all thermostats. And we have a predetermined comfort level that we like to set at. Call it 80 degrees. And what happens is this is an area that we're happy. We could have $100 million in the bank, sure, but I'm okay where I'm at. I could be in a little bit better shape, but you know what? I'm fine where I am. I'm not 800 pounds, right? We can always justify, can't we? Things that we should do and then we should all over ourselves. And this comfort level, like the markets, determines equilibrium. And then life has a funny little way of throwing volatility into our life, doesn't it? So I'm sure, show of hands, if I could see all your hands, if I asked you to put your hands up, who likes surprises? That the majority of you guys would probably say yes, but that's nonsense because you only like surprises that you like, don't you? The other ones you call problems. But the funny thing about problems is you need them. They're feedback. So we have these negative events that occur in our life, and maybe we get fired from work, we go through a big bad breakup, the economy goes to, the dumpster, whatever, insert profanity word here, and that drops our thermostat. So we're at 80, now all of a sudden it's freezing cold and we're 60 degrees. What do you think happens? Well, we get our ass in gear, don't we? Immediately, we figure out what to do. We either get a new job, we get into better shape to get a better boyfriend or girlfriend. We start a new business, we figure out different ways to make more money because the economy's worse. It galvanizes us into doing something to return back to our comfort area. It doesn't mean that we, become multi-millionaires, although some people will take that momentum through, but usually we're getting back to comfort. Now, the interesting thing is that I'm sure the majority of you guys have been through that at some point in your life. But the funny thing is that it actually happens in reverse too. So we all of a sudden get this burst of motivation. And we're like, you know what? I just got a promotion at work. My relationship's going well. I want to actually take this to the next level. Things are going extremely well for me. Let's supercharge this, right? I'm doing extremely well on trading. This has been a phenomenal month. Let's go. And all of a sudden your temperature goes from 80 to 90 to 100 to 105 and your brain goes, hey, no. Let's take the weekend off, right? We don't need to work out this week. Let's give ourselves a little bit of a break. Let's go on that camping trip. We don't need to back test tonight. I think we're trading really, really well. And what ends up happening is we return back down to that comfort area. We return back down to normal. And that's a major issue when we want consistency, because that creates a bit of a roller coaster in our life, right? So what ends up happening? How do we get up there at 100 degrees and then actually make that our new normal? And that leads into our story. So we are a function of our habits, and all lasting change begins with a shift in our story. So that's choosing to be somebody else. It's not the identity statements where I am a disciplined trader, because your mind says, no, you're not. Look at this, this, and this. It gives you a little projector, doesn't it? It's like, you know what? You're not disciplined, because remember what happened like 6 years ago on this day? Right? But it's choosing to be somebody else and saying, this is who I am now. Now, the interesting thing about the story is that it determines our strategy, or it determines our ability to follow that strategy. So listen to these two different sentences and you can hear the difference in your story. So for example, hey, John, do you want a cigarette? And John says, no, I'm trying to quit smoking right now, so no, thank you, right? Versus, John, do you want a cigarette, man? And he says, why would you offer me that? I'm not a smoker anymore. Very, very different. Who do you think's more inclined to stop smoking long term, right? And if your strategy, by the way, we have winning strategies and losing strategies. Anything that's negative, you're likely acting out a losing strategy. Change that. Now, if you're trying to quit smoking, even if you're identifying as a non-smoker, but you're carrying around your favorite pack of cigarettes in your pocket, you're probably going to have a bit of an issue. If you're drinking and you think drinking is a problem, and yet you still go to the bar with your friends every Friday night, Saturday night, for the next 3 weeks, willpower will not last. That's a poor strategy, right? Our strategy is only as good as our ability to follow it, and that comes from our story of who we are, our identity, which then changes our environment, and it changes our ability to follow that strategy. So doesn't matter what strategy that somebody hands you in the market, your ability to follow it, if you're not disciplined and it's calling for patience in the market, you're probably going to have a very, very hard time. You're setting yourself up for failure. And then we tend to blame strategy and look for either a new indicator or something, or we search for a different mentor, or we go here and we pick this piece up or whatever. And in reality, it's the feedback of what's going on the chart that's actually telling us, it's calling aloud for remedy, and it's telling us that we're the issue. Our ability to follow it is the issue. So people will say journaling, people will say practice, people will say backtest, but the reality is that if you're not backtesting the right things, if you're not practicing the right things, if you're not changing your relationship with money, that it's not this hard, elusive thing. It flows freely into us when we follow our strategy and our plan. And you're setting yourself up for failure. So how do we do that? Essentially, our minds cannot distinguish between what's real and what's imagined. So we talked about habits and why we do everything. This is where emotion comes in. This is the power of it. So when we're having a little bit of fun and we're now creating somebody new that is going to achieve everything we desire in the trading world or in our personal life or whatever, what we're doing is we're having fun redesigning this person. And when we attach emotion to that, what do we want tomorrow to be? This is what I do every night before the market. I determine and I choose exactly who I want to be the next day. I see myself executing my system. I feel the rush of excitement and it doesn't affect my trading. I get attached to who I want to be and I get excited about it. So what this does is similar to any sport athlete, a basketball player that's envisioning shooting the basket and going into the hoop. Well, what ends up happening is that we can't distinguish between if that's real or we're imagining it. But if we get excited about the imagination, our minds actually think that happened. And what ends up happening there is exemplified by this story as well. And I love these little stories where they took 3 groups of basketball players. And the first group actually practiced free throws for 2 weeks straight. And the second group didn't practice or do anything for a couple of weeks straight. And then the third group didn't shoot, but they actually imagined shooting the basket into the hoop for the same period of time. And what they found after the study was concluded was that Group A, understandably, actually showed a noticeable improvement in their free throw shooting. Group B declined, shocker, right? But Group C, that didn't actually touch the basketball at all, showed a very similar improvement to Group A without touching it at all. That's the power of the mind and the mental rehearsal. And this is the work that professional traders do, but the majority of people either don't know exists or don't really know the actual power of it. So that's mental rehearsal. Now, when we're having fun and we're designing, essentially, we all have an idea of what that trader looks like, that person we want to be, and their habits, right? And we say things like, if I asked everybody in here, what does that look like? Well, they would say things like they only trade their system, right? They remove emotion from taking losses, right? They don't adjust their stops. They let the losses come. They let their winners run to the actual target for once. What a concept, right? They have these XYZ Superman personality traits, and they regard failure as feedback and not actual failure. Just a million ways to not make a light bulb, but guess what? Eventually it's going to work, right? But they continue on building that 1% at a time. So when we're designing ourselves, essentially what we're talking about is framing. Now, what framing is doing is it's our internal representation of what's going on in front of us. So you have, say, a car accident, and you ask 4 different people at the scene to describe it. What are the chances they all describe the exact same thing? Highly, highly unlikely. Highly unlikely. Why? Because one person will smell the tire tracks burning on the road. That's their framing. That's their internal representation of what happened. They will carry that with them for a long period of time. One person hears the broken glass or the crunch of the cars hitting. One person will actually see different things, and maybe they see whatever the ambulance came in at. They all have different representations, and they're all true, because that's how our mind distorts and generalizes. We see different things, and that's essentially how we make up the world. We don't experience life. We experience the life that we focus on. So if we're focused on the losses that we're taking, or if we're focused on our inability to follow our system or whatever, that essentially we're in a negative state, which is then not exactly empowering us to be able to follow our strategy very well, right? So that fear that enters, or that doubt that enters, is obviously not very powerful. And it's very, very good to use some NLP and flip that framing. So the idea is that life happens for us and not to us. And all of our losses are actually teaching us something to either cut out of our strategy, or it's teaching us about how we view the market that is calling aloud for remedy, because we're meant to grow. We are growths by nature, right? We're not meant to be where we are right now. We're meant to be far better. And everything that happens is actually pushing us towards what our deepest, darkest desires are, right? Now, again, I went over framing. It's a perception of a particular event based off of our internal communication. So a few questions for you guys, especially those of you that are avid traders, is, are taking losses frustrating, or are they feedback? And the conscious mind probably says, well, they're feedback and it's okay. And yet, hopefully, nobody in here revenge trades significantly. Nobody in here is trying to make that back immediately and having issues that way, right? And one of the key ways of determining this is if we look back on a recent positive experience, whatever that is. It can be something small. First thing that comes to mind, what happens? Does our mind drift to what we could have done better? Do we look at, well, you know what, I made $10,000 last week, but I could have made 20, or my you know, my trades could have, I could have had a better win rate, or I could have done this, right? Or do we get appreciative and excited that we actually made this money or that we had this achievement? So that's one way of knowing that. And another one is that usually, again, we do things for two reasons. If we're trying to avoid pain, but we have a current opportunity that we feel we don't have the time, money, or resources for, is it really a lack of resources? Or are we just not being resourceful enough? Are we giving it our all with that opportunity, right? So a couple of different questions for you guys. Now, I want to kind of end my time here with, we have a school community. We talk about all this sort of stuff for free. We give quite a bit away. Our mission is to try and make newer traders feel that they can do this, both by holistically improving what their framing is, both to the market and with money, and arming them with the knowledge of the market itself. So we have a different kind of concept on there. There's a bunch of different free courses as well. I would encourage all of you guys, if any of this presentation resonated with you guys, please consider joining. It's free. We're trying to improve the lives of many out there and serve people similar to what we're doing here today. So please consider joining. We just started this up, and yeah, I wanted to thank Traders Corner again for giving me the opportunity to serve you guys today, and open up the floor to any questions that you guys may or may not have.
Are you able to see any of the questions? Do you know where that's at, or would you like for me to read them to you?
Yeah, I can. Or time frame, 5 minute.
Yeah.
Oh, that was a little bit a while ago. Oh no. I trade burstly off of the 1 minute. We have some of our very, very good traders trade off the 3 or the 5, but I trade personally off of the 1. But essentially, what I'm trying to determine on the 1 is I'm trying to determine what the 15-minute time frame is doing. So take that as you will, but I look at the 1 minute time frame for order flow perspectives. The next question. Thanks, Paul. Always great to hear your wisdom. Appreciate you. Where do you join? It's on school.com. There's a little link there. It's Luminary Trading is our group. Am I drawing high volume areas? I actually look at the chart and I determine whereabouts the volume is. So if we go way back to, say, this area of interest, right? I determine the high volume area is this. It's considered an SNDR. Essentially, the market made a decision here to make a new high. So that will be the area that I would expect a lot of volume to be at, because it was responsible for making a decision. Similarly, I would actually expect a return to this, because I would expect that's where the volume is. I don't actually have an indicator on my chart that plots volume. I look at the area of interest on the chart that determines what is going on. How many ticks are you looking for in a trade? Your maximum risk in ticks depends on the trade. If I have to risk 20 points, usually I will trade back or trade with micros. Anything other than that, usually my trades have about a 15-point stop, depending on what the volatility is like. The crazy volatility at the beginning of this year, we had to use a little bit of wider stops, but I believe that trade that we showed, that was a 40-point trade in that, and the risk was about 15 points. And that's theoretical risk. Quite often, if we're right, we don't have that kind of drawdown, but we have to allocate for that, right? So it, you know, it looks great in theory, right? And many of these trades do, but the reality of it is that this could have traded down a little bit more into this order block and then bounced underneath this candle. We have to allocate for that. But usually my first target's about 20 points and I de-risk, and then I let the rest go to target, and that can be anywhere from 40 to 50 to anything onwards. would have been very helpful identifying the lower time frame and higher time candles earlier in the presentation. Yeah, there's a lot that I go over, and I didn't want to flood you guys with all that information. The lower time frame candles, if we're looking at something like this, right? We consider this. This actually wasn't even a pullback, but the higher time frame candles, you can kind of see them on the chart as well. But the idea with it is that we're actually trying to determine order flow and then use the lower time frame to determine when we've gone from bearish to bullish, and not trying to be involved in every single bit of the market. I feel that the majority of traders try and find ways of attacking and attacking and attacking, and they're not studying how the price actually moving. So the idea is that once we close above this candle here, right, because that's a change in personality, you've got all these small candles in here. Well, that one sticks out like a sore thumb. So as soon as we close above that, we've now got a major shift, right? So it's not so much looking at each individual candle or whatnot, right? We're looking at, has price created a zone? We left it, we traded back into it, okay, and now we expect the market to trade higher again. But there's a lot of different stuff on the free school community as well with this. We go into it. I think we have 10 to 15 minute long videos on some candlesticks and some swings and whatnot. So didn't want to bog down the rest of the presentation with going over stuff, even though it's a passion of mine. Yeah, thank you, Anthony, for that link.
Yeah, you're welcome.
Yeah, I think my time is up, but thank you very much for allowing me to speak here, and hopefully you guys have a great rest of your weekend.
Thank you, Kevin. Fantastic work. Mind beats market. Now that's a rare combo. For those intrigued by NLP and trading, be sure to visit the link shared in the chat. Up next is Gary Donahue from Viper Trading Systems, a true veteran of the trading world with 25